Good afternoon, everyone, on this rainy and gloomy Saturday. Thank you for being here. Appreciate everybody showing up. June, Chels, all the regulars, thank you very much. Appreciate it. I am not late. Let's not start with the late comments. Grogu's in the background. There's also a Grogu on the desk. Cookie Monster, what's going on? Appreciate it. Well, let the record show I am still a liar. I lied to Matt. I lied to all of you. The S&P is still not 7,000. It just isn't. I don't know what to say. 6966.28. Still a liar. But be that as it may, we're making new all-time highs across the board. The Dow is a stone's throw away from 50,000. We're at 49,504.07. The NASDAQ creeping up to 24,000. It's getting interesting out there, and we're only 1 week into January. So before we go forward, because I am probably going to talk about a bunch of stuff, including some stuff that was discussed last night, because I've had some more time to digest the post from President Trump. So please read the disclaimer. I am not a financial advisor. I am not your financial advisor. Please do your own due diligence. I just do a lot of research and make these videos for entertainment and educational purposes only. Hopefully you find value out of it, but please do your own due diligence. Whatever I do, I know the risks. I'm perfectly fine accepting losses. I don't know your situation. Use this as informational only. With that being said, I put an outline in the description of what I want to discuss today. Bunch of different topics. I'm going to go through it. I'm going to try to interact with the chat. I'm going to try and be good about the timestamps. And it was a green week this week, so we're going to get the green Star Wars pen out. I'm going to try to do timestamps for everybody that watches this later. It is not as easy as what you would think to actually stop and write everything down. It's a lot easier when someone else is here also. So, thoughts on now? I mean, we're going to get into it. Lena, what's going on? Glad you can make it. All right, before we really get into everything that's on what I wanted to discuss, we did really good on QXO. It's doing well. Hopefully it continues to do better. I am planning on making a full-blown Zeta video. Not doing it today. It may happen tomorrow. I still want to do a little bit more research, but the research I've done, and I know I missed the bottom, and I know I'm a little bit late. The presentation or fireside chat that their CEO did at CES changed my mind a little bit. I am very interested, so there will be a full due diligence piece coming out at some point. So I'm going to find the timestamp and let's get into it. So it was a big one this week, and we have record highs across the board. Inflation's cooling to 2.7%. We got GDP printing 4.3%. This is a backdrop that I think can promote an everything rally. So things I'm going to go over: what drove the rally, the most important market news of the week. We had a couple of interesting stories, especially with Meta Amazon. Going to specifically talk about Meta's nuclear expansion. I've talked a lot of crap about Oklo. We're going to get into that. SanDisk and the NAND price shock. Amazon's new concept store. Inflation and GDP story. The credit card rate cap headline from President Trump. What it means for the financial sector. What to watch for next week as we head into Q4 earnings. Q4 earnings. I cannot believe it's 2026. I feel like we just got through Q3 earnings, and I am so excited for Q4 earnings. So Let's get into it. What happened in the markets today, this week? So on Friday, the indexes finished strong, green leg up. Let's bring up good old Weeble. Have it ready this time. No fumbling around. Have everything set. We're at all-time highs. This is a one-year chart. Crazy year we had. Crazy year. So for the week, the Dow gained 1.37%, the NASDAQ 1.35%, and the S&P 1.01%. I mean, it's a thing of beauty. So what drove the rally? I got three major themes. So the market got a good jobs report that wasn't high enough to force a repricing higher in yields. So rate pressures compressed and multiples continue to stay contained. This wasn't only throughout mega cap tech. We saw this in materials and industrials as they participated in the rally. And this matters because the healthiest rallies are when the market broadens out beyond a handful of names, which have predominantly been the Mag 7. We're all in them. We all love them. They've led the market. I have said it before. I'll say it again. I do think we are going to get an everything rally. I do think we will be met with a downturn of roughly 10 to 15%. I think ultimately we have a very good chance of reaching 8,000, even though we're not at 7,000. We'll see what happens. So AI demand continues migrating into the real economy. The week's meta and storage headlines remained at the forefront of the AI build out, and it's touching everything from power generation to enterprise NAND pricing. We got a good jobs report, 50,000 non-farm jobs added in December. Unemployment fell 4.4%. Look, I know that the jobs report was below expectations. The reason I am saying it's a good report is because unemployment fell and we added jobs. That's all you can really ask for. So the other reason that this is really good is because this is a mix that can land in the eyes of the Fed is growth is cooling a bit, but not breaking, which helps keep the soft landing narrative alive. Very, very good. Now, macro crosswinds still matter. The Supreme Court did not issue a tariff decision on Friday, so the markets don't have that news to digest. Commodities stayed active. Oil and gold moved higher, but oil is not in a dangerous place. Bitcoin's holding 90,000. So I'm interested in it. I am very interested. I'm not a Bitcoin holder, not a Bitcoin believer, but you know what? From a sentiment standpoint, it's important. So you got to root for it even if you're not in it. I'm in Ethereum and XRP, but I got to root for Bitcoin. So we'll see what happens. I'd rather see Bitcoin at 90 or 100,000 than 60 or 70,000. I can tell you that, because from a sentiment standpoint, that would be absolutely horrible. So the week's biggest movers and themes. Chips held the lead. A big driver of Friday's move was strengthened chip names. We had Broadcom cited as a catalyst in the record high close narrative. We also saw nuclear stocks rip on Meta's data center energy. So Vistra and Oklo, can't believe it, but Meta announced major nuclear-related agreements with them. And it matters because everybody is seeming to understand that power is now a huge constraint. A lot of people did realize it. Now it's becoming even bigger. And it's now a gating factor for the AI scaling story. Intel spiked on a Trump post after a CEO meeting. Great meeting. Obviously, that's always what they say. Great meeting. Intel spiked. Not really sure why. I think what Lisa Su presented at CES was so bullish. I've never been an AMD person on a chip side, Maybe because I sold AMD at $3.78, still haunts me to this day. But after seeing what she put out, I am considering doing an AMD build once the new chips come out. So I think that they've closed the gap on Intel. I'm not really following the Intel story as much. I think there's other names in semis that are interesting, but Intel is still very important. GM took a major hit on EV related charges after they disclosed a significant charge tied to the EV business. I mean, it matters because EV demand and profitability continue to remain highly scrutinized, particularly when capital costs are still elevated. So I think people are really starting to understand that a lot of people still want to buy a combustible engine, and a lot of people could care less about EVs. I'm one of them. I could give a shit about EVs. I will never buy an EV unless it is the only type of car that can drive me around. I mean, I don't want one. I don't know what to tell you. I don't want one. So we'll see. Not into it. Then you got Rio Tinto and Glencore. Merger talks resurfaced. Mining stocks moved on the merger news. Should say M&A chatter news. But, so Meta. Really interesting. I'm a long-term holder in it. I think that the pre-revenue companies are absolutely crazy. You have Oklo going up 7.9%, back over 100 on Friday to close out the week of 105.31. It was up 22.78% this week. So Meta made one of the most important announcements in AI infrastructure that we've seen in a while, because it's not about buying more GPUs. It's about securing energy. GPUs cannot run without energy. So they announced nuclear energy products and agreements intended to unlock up to 6.6 gigawatts of power capacity over time to support its AI ambitions. So they highlighted Vistra, Oklo, and TerraPower as the deals. Vistra specifically said these were 20-year power purchase agreements supporting Meta in increasing output from 3 nuclear plants. So the investment takeaway that I have from this is the AI bottleneck was chips, then it became networking and cooling, and now it's down to power and grid access. I think there's some interesting plays in the power space. I think there's some interesting plays in utilities. I'm still not convinced about these nuclear companies. But I've been wrong before. They're ripping again. Let's see what happens. I mean, I still like Vertiv a lot. AI data centers require huge continuous loads, reliability, long-term planning, and electricity. You need cooling. You need everything. So I'm more interested in companies that are making money now than companies that aren't going to make any money until 2030 to 2035. I mean, nuclear is attractive because it's base loaded, doesn't depend on weather, but it can run continuously. I mean, I do think it's the one thing the French got right. I think we need more nuclear in the country. We need more of everything except for coal, in my opinion. But the SMRs are just not that interesting to me. We'll see what happens. If this nuclear trend continues, it will reinforce broader AI picks and shovel stack. If this is BMNR texting me again, I swear to God. How did I know? Okay, I'm going to read this out. And I did not hit stop because I want to see how many times they text me. This time it's Ken with Alliance Advisors. Last time it was Hector. The time before that it was Mercy. Time before that it was Exili. Time before that it was Ken again. I guess they're doing a round robin and they're not stopping. It's freaking ridiculous. They need to stop with all this bullshit. Chels, you only get emails from them. I get everything. I get texts. I get emails. I got letters sent to the house. crazy. We're not saying hi to Ken. We're not saying hi to any of them. They need to stop wasting shareholder money with this, is what they need to stop doing. Sick of it. Absolutely sick of it. All right. So where was I? So I think that from an energy standpoint, in the AI pick and shovel stack, we're going to see power producers and nuclear developers potentially catch a bid. That's what we're seeing with Oklo right now. Once again, I think we're going to see grid and transmission infrastructure do well. I think companies like NextEra Energy and Southern Company can do well. Data center builders and electrical equipment, so Eaton, Vertiv, those companies I think should do well. Cooling and thermal management should do okay. And then storage and memory suppliers. We all saw what happened with Micron. We also saw what happened with SanDisk. So there's a lot of things that I think can do well. There's a tremendous amount of money being spent. We have roughly 1.2 trillion, not billion, $1.2 trillion in remaining performance obligations from the big five, I'm calling it now: Microsoft, Oracle, Alphabet, Amazon, or big four. Meta's not in there. So if all of that materializes into top line revenue over the next 2 to 5 years, we're going to need a lot more data centers. We're going to need a lot more of everything. So there's a lot of CapEx that's going to get spent, which is interesting. And I'm excited for the end of the month to see what these companies say on their earnings calls. So we know storage is becoming a bottleneck. So let's just jump right into SanDisk. So I should probably keep up with the freaking timestamps, right? Probably screwed up already with the timestamps. All right. So SanDisk surged after reporting indicated that all of the NAND, 3D NAND prices for SSDs in Q1 2026 could double in price. That's huge. And a lot of investors think NAND is just a commodity cycle. It's not. None of this RAM is a commodity cycle. And people think about this as the boom bust from your laptop and your desktop. With DRAM, this is completely different, especially when we see the advancements from AMD and NVIDIA when it comes to the GPUs. So the AI build out is completely changing the conversation because of the AI workloads that are being created. It's bigger data sets, higher throughput needs, and more storage requirements. If enterprise NAND pricing is truly tightening enough that suppliers can attempt to move like this, it implies demand is stronger than people think. Supply discipline is tighter than in past cycles. So it's interesting. I think these companies can keep going. I think that Micron can keep going, SanDisk can keep going. I picked Micron in the stock draft. I did not think it was going to do what it did. It is certainly offsetting my two bad picks of HIMS and MicroStrategy that I took as flyers. But we could be, as some of the people are putting in the chat, in the super cycle for RAM. We're going to need so much more memory to support this. This is not just about GPUs, and I think a lot of people overlooked it. And even though I put it in the 10 stock portfolio for the draft, I did not buy it. And it was obviously a mistake. I actually owned Micron very far back in the day, got out of it, never got back into it. I do think that these are going to do pretty well. So we'll see what happens. Q4 earnings are going to be incredibly interesting because it's going to lead to the next leg and what happens in 2026 with capital allocation. So Amazon, big story. A lot of people here are shareholders. Hope you have your coffee. I have not met my quota for today with coffee, so we're still drinking it. I was a little shocked about this because they announced a new big box store concept near Chicago. Amazon is planning a new large physical retail concept, specifically Orland Park, Illinois. it looks more like a Walmart style supercenter than anything Amazon has done recently. Now, we know that Amazon operates smaller locations. What I could find is local planning coverage indicates the plan involves a very large site with approvals moving through the process. This isn't Amazon going backwards into retail. That's definitely not how I'm thinking about it. I think what Amazon is trying to do, they're trying to solve three things at once. They're trying to solve convenience for shoppers, reduce the cost of last mile logistics, and increase their ecosystem stickiness, especially if the store doubles as a pickup and fulfillment center. So we know that Amazon needs more warehouses. Why not do everything at once? And if they can combine general merchandise, grocery, and fulfillment pickup, it can improve economics while capturing more of the household wallet. So my only fear in this, and I'm interested in what everybody in the chat's going to think. Not going to go on. I want to ask some questions and interact for a little bit. My fear is that the market is going to look at it as becoming a traditional brick and mortar location. But then on the other hand, it's not even being valued as that because Walmart and Costco actually have bigger multiples. So maybe this will help them get a bigger multiple because it'll make it more sticky. I'm not sure. How does everybody in the chat feel about this? So Amazon will benefit when people start spending their Yeah, look, tax refunds is a big thing. I was with my accountant on my AC trip, and we talked pretty extensively about tax planning and whatnot. And he specifically told me that I'm going to do better this year because of the big, beautiful bill. I still have no idea what I'm going to owe, but it may not be as much as I thought. So I think you're right. I think that when people get bigger tax refunds, I think that's going to get pumped right into the economy. And that could mean people will start getting their Q2. We could get an outsized bump in EPS. Chels, would you ever consider bringing the account onto the channel? So I would love to. I highly doubt he will come on. My other buddy, who is a CPA, he does not do personal taxes. He does corporate taxes and he does auditing. I can probably get him on. I don't think my accountant will come on. He is so busy. I don't think he'll have the time. But I'm certainly going to ask. Yeah, Lena, that's a good point. A lot of packages being stolen, having a pickup facility and maybe having the ability to check off if you want to pick everything up or not on your way home from work. Maybe that's interesting. I'm trying not to laugh at what Chels put because I can not see my accountant being like Ben Affleck in that movie, even though he has some of those toys. Well, we'll see. Tax season's upon us. Hopefully everybody's getting everything ready and pre-planned, but hopefully we will do pretty well this year. And I do think it'll be a bump. Amazon should benefit, and I'm excited. When it comes to the big store, if it can cut down on last mile, and I don't have the unit of economics behind it, so I'm just thinking about what their operating costs are, how much money they spend. I mean, I think it was something like $278 billion. That number's probably wrong. Let's see. Yeah, that was pretty damn close. $267 billion in the trailing 12 in operating expenses. So look, even if they can cut over the next 5 years, if they can open up super centers in critical areas, if they can reduce their operating expenses or have them plateau and reduce the cost of last mile and create a stickier environment, that could help the multiple. Listen, Bezos needs to get back to the office We need them not on the boat. We need them not partying with DiCaprio. We need them back in the office. Bezos, please get back to the office. Amazon shareholders miss you. We've underperformed the S&P for the past 5 years. We need Jeff. That's a good idea for a shirt. We need Jeff. And then on the back, it'll say Bezos for when people ask how. We need Jeff. So, could be pretty bullish for Amazon. What do you guys think? I don't go to Whole Foods enough. There's just not one close to me to know if it went downhill or not. Okay, this is why it's hard for me to read the comments and do these streams, because you guys are amazing and make me crack up so hard. Sometimes I think you do it on purpose. Sometimes I think you do it on purpose. Walmart is trying to be Amazon, and they have stores, and now Amazon's trying to be Walmart. I mean, it's funny how those things work. See what happens. Everything is setting up for a good backdrop with Amazon. And this is another one. Inflation's coming down, which is really good. So November headline, obviously this wasn't too recently, but 2.7% year over year. Core's down to 2.6%. Shelter was up 3%. Energy was up 4.2%. But the critical categories slowed a little bit. And the biggest spikes are no longer compounding the way they were. I think this is really important because a lot of categories that drove inflation higher in prior years are just not accelerating at the same pace. And that's huge. So I'm interested in the upcoming data because the government shutdown did distort the timeline. So we'll see what happens. We did have GDP surge to 4.3, and the combination of the two is really exceptional for Q1 earnings. I don't know how much it's going to show up in Q4, but the BEA broke down GDP growth as increases in consumer spending, increases in exports, and increases in government spending. So growth strong enough to support earnings is here. Inflation cooling enough to support valuations is here. This is a good backdrop. And when you think about the Fed cutting rates, and we have an FOMC meeting in, I think, 18 days from now or so, I don't think we're getting a rate cut. Okay. Now, if we do, great, because everybody knows my stance. I want rates below 3% by the middle of 2027. I don't think we're going to get a rate cut until May or June. Hopefully, I'm wrong. CME Group is projecting the most likely scenario is, one sec, 50 basis points off of rates this year, 225 bip cuts. And I think we're going to get 3. I think that we get a new Fed chair. The Fed has a lot of doves on it. I think they're going to become more dovish because you're not going to have a Fed chair that has the same stance as Powell. And I do think we can get 3 rate cuts this year, and I think we can get 2 or 3 next year. And that will do a lot because, one, businesses will be in a better position to borrow to expand. 2, businesses with high-yielding debt will either be able to refinance or they'll be able to take out and issue new debt to pay back the higher-yielding debt. So they will decrease their interest expenses, which should expand margins. So I'm very interested in what's going to happen with rates. And then carrying costs on debt will be lower. We're going to get into the Trump stuff very soon because that's going to impact what I'm saying. Lena, that's amazing. Google at 88.89. Love that. That's the stock that nobody believed in this year. A couple of us were pounding the table on it, and it worked out. That's phenomenal. Hopefully, People are doing well on that. I think we're going to see a rotation out, but Alphabet did become the second biggest company. So it's really interesting. I think they're a great company. I'm just not sure. I don't think they're going to replicate what they did in 2025. I do think that they'll beat the market in 26. I think Meta is going to make a comeback, and I think Amazon is going to reaccelerate growth a little bit. But the combination of inflation cooling, rates coming down, and thank you for the super chat at 1 May. I appreciate it. Any advice for a 33-year-old who is late to investing with a high listen, 33 is not old. Okay. Let's start there. I'm not going to give you individual advice, but 33 is not old. Let's level set here. Okay. Most people do not start really investing in their 20s. Okay. Most people are living life, going to school, getting started in their careers, and figuring out what they want to do and who they are. So let's not normalize becoming a millionaire at 25 because it's not realistic. Okay. So 33, love the fact investing. I have both VOO and NVIDIA. I love VOO. All I can say, do yourself a favor. Think about where you want to be in 3 decades from now. Figure out a plan of how to get there. I mean, why would 33 be old? I don't understand why 33 would be old. We got to not normalize that. It's not freaking old. And I do think the internet is to blame for this. I really do. I really do. So thank you, Matthew, very much. Appreciate it. Go NVIDIA. I'm with you. Dude, you look like my cousin. I need to figure out how to blow up that picture. Like, you look like my freaking cousin. That's crazy. Absolutely crazy. Anyway, Chels, how is society saying that that's old? Like, it doesn't make sense. Lena, I do not believe you are old AF. I'm going to try not to curse, even though I curse like a sailor. Anyway, all right. So the combination of increased GDP, when you got 4.3%, you have the Fed economic projections saying we're going to get GDP expansion for the next 3 years, rates coming down, inflation coming down, commodity prices down and leveling off. So I do think that this is a setup for an everything rally this year. And I'm really excited about this. Let's see. Matthew says, everyone says I look like someone. I swear to God, I should not pull up a picture of my cousin, but you do look like my cousin. It's freaking wild. Oh, do not thank me for streaming today. I enjoy hanging out with everybody and making these videos. So thank you for showing up. Don't thank me for streaming. Thank you for showing up. Old is a feeling. Never act your age. I love that. You know what? This is really good. Thank you, Joker, for saying that. Richest people in the world, average age was 37 when they made their first million. I mean, you know, I think we need to not normalize becoming a millionaire or a multimillionaire in your early 20s. It's just not realistic. Thank you, BJ Cali. Appreciate it. Do you think MSTR and BMNR recovers? If so, when? Yes, I do think they recover. I couldn't tell you when, but I do think they recover. I think crypto is going to be just fine. I really do. June, I turned 50 this year, a few days before the USA turned 250 years old. Man, the USA is going to be 250. That's wild. That is wild. Elena, that's 100 shares more than most of the bears. So, you know, all good. All good. So, anyway, Good setup for this year. I think we're going to see a lot of companies come out with big expectations for 2026, and it's going to get very, let's just say, I think sentiment is going to change. I think Q4 earnings rolling into Q1 earnings, we're going to get a lot of information in a short period of time because the cycle is going to start end of January into February, and then we got starting up again in May. So I think the market's going higher. That's May. It may not, but I think it's going higher. I have no idea what my return was for 2025. I don't calculate that stuff. I just look at numbers in the accounts. Couldn't tell you. It's too difficult to figure out. All right, I'm going to transition to the big one right now, and I know I missed a freaking timestamp here. Unfortunately, I don't know how to get good at this, so I apologize to everybody. I suck. Anyway, President Trump dropped a bombshell last night, everyone, and this is for anybody who's interested in financials, interested in SoFi, JP Morgan, et cetera, et cetera. So, look, this is all hearsay, okay? We have no idea what's going to happen. Ackman's coming out saying it's a bad idea. We got a lot of people talking about it on X. We talked about it last night. I agree with some of it, but here's the thing. President Trump, I should probably find it on X and read it word for word. It's a very short post. So just give me one moment. I will bring it up and read it word for word so we don't distort everything. President Trump, 10%. Okay, here we go. Sharing the screen, word for word, okay? Please be informed that we will no longer let the American public be ripped off by credit card companies that are charging interest rates of 20 to 30% and even more, which festered unimpeded during, we'll say, the last administration. Affordability, effective January 20th, 2026, I, as President of the United States, am calling for a one-year cap on credit card interest rates at 10%. Coincidentally, the January 20th date will coincide with the one-year anniversary of the historic. All right, I'm not going to go through the rest of it. Obviously, you see what's on the screen. Those were the key points of it. Now, cap on interest rates on credit cards of 10%. I mean, there's a lot to unpack. So I'm going to get to the comments in a little bit. Let me go through some thoughts real quick. So the direct impact of something like this happen, credit cards are priced for funding costs, operating costs, rewards, fraud, default risk. If you cap APR at 10%, the immediate pressures would likely be margin compression on revolving balances, tighter underwriting, which means harder approvals, lower credit lines, and more consumers push toward alternatives as risk mitigation becomes extremely tight with the credit card companies. So Reuters noted banking groups warned it could reduce credit card access and push consumers toward other potentially more expensive options. So who would be most exposed? Issuers with a big credit card business, think Capital One probably, Amex, those types of companies. That's just off the top of my head. Lenders that rely on revolving interest income and business models that can't quickly reprice via fees. So you do have some second order effects that would happen. Consumer spending and delinquencies. If credit tightened materially, it can cool consumer spending. And then if people don't have as large of credit lines, it can also curtail consumer spending. there's a lot to really think about. I understand why he's doing it. Forget about midterms, which is probably part of it, but credit card fees of 25-30% are predatory. I think at the very least we can agree on that. I don't think it matters what your political affiliation is. That's borderline loan sharking. Okay. And I get it that the credit card companies and big banks have business models that they need to run. The problem I have with this is not a monopoly in the free market. I would rather see let the free markets figure it out. You have a lot of competition for credit cards. And I think that if this was to pass, it would create shockwaves through financials. Financials are 12.5% of the S&P 500. It is not a small sector. Forget about the chances of this happening. Let's just play it out if it happens. You could have a lot of people get their credit card limits slashed in half, maybe by 3/4. A lot of people probably would not be able to get a credit card. They'd have to get a secure purchase card. It could push people to taking personal loans, going elsewhere on the black market, which would not be good. And I think it would really destroy rewards programs. And the other thing, a lot of us enjoy free credit cards. Now, there are some people that love paying $4.95 or $7.95 annual fee because they travel or their lifestyle sets up where that fee grants them a tremendous amount of value that it is worth it to them. I am not one of those people. But for some of the travel cards, I completely understand paying $4.95 or $7.95 because of all the added benefits it gives you. I get it. We could see a normalized thing where in order to keep a credit line or get a specific card with specific rewards, instead of it being free, it may now be $1,000. It may be more. I have no idea. Now, I do think that this will be difficult for the financial sector because this could create a dark cloud over them and it could create negative sentiment, like really bad negative sentiment, even if it doesn't show up in the numbers for a couple of quarters. And this is something, I don't know how the hell this would get passed in a week or two. I mean, this is likely to not get passed for a long time, at least 6 to 8 months, in my opinion. Could be wrong on that. We had Tim Sweeney on last night who did a phenomenal job. He's a lawyer. And if you go back to last night's FinTech Friday, you can just forward to where he comes on. He did a great job explaining a bunch of this. And I've been talking to a few people last night and today. Some of them feel that SoFi would benefit because they would be one of the most agile companies in the space and they'd be able to reconfigure and pivot quicker than the large banks. Maybe. Now, at first, I had thought Tanner and I were having a little bit of a disagreement last night. I did not think that this would be huge for SoFi only because I felt that a lot of people utilize the personal loans for other things than just consolidating credit cards. He informed me that credit card consolidation is the number one reason, or likely the number one reason people access private loans from SoFi. So I don't know. This is interesting, but it definitely makes me rethink things with SoFi. I want to see what is said this week. I think that you're going to have the CEOs of the big banks. I think you're going to have the CEOs from the credit card companies. I think you're going to see the lobbyists come out. And hopefully, this is a negotiating tactic. We know that he likes to make a deal, and it puts Trump in a win-win situation. Because this is something where if Albert, thank you very much. Okay, I think you're wrong on CC. The consumer has become addicted to CC and spending money. They don't have it. I'm not advocating for credit cards. Okay. I'm just saying that I think it goes against the free markets to do this because there is a lot of competition. And I agree with you, but I think the way to do this is financial literacy and making sure that we arm young adults with the information they need coming out of high school. And I'll die on this hill, okay? And I will go after any education, any teacher, any superintendent. I don't care. Said my three favorite words, right? I don't care. All right. There is no reason, okay? There's no reason to force people, unless you are looking to go into engineering or one of those types of fields, to take physics and calculus. There's no reason. Most people do not need it, okay? But what everybody needs is financial literacy. And I'm not just talking about how to open an account. When you think about it, and I'm going to guess here, graduation is in June for most high schools. Let's say 40% of students are 18 when they graduate. What does that mean? That means that while they were in high school, they could sign up for a credit card. That means that when they get out of high school, and even before, you can sign up for student debt and take loans. So I think we need a lot more financial education. I think we need a much bigger education on what type of degrees can actually help you get certain jobs, what the ramifications are of going to these schools and coming out with 150, 250,000 worth of debt. I think that there needs to be such a bigger emphasis on this. I think there needs to be a bigger emphasis on how the power compounding works, how putting $100 a week or $100 a month away in an S&P fund for 40 years, starting when you're 20, can set you up for retirement. I think we need to look at retirement planning and making that a core fundamental of the education system. It is crazy that we don't. It is crazy, and I freaking hate it. I hate it. So I would love to see that. And I think ultimately Trump will come out of this looking good, only because if nothing happens, he tried. If he gets 10%, I mean, a lot of people are going to be really happy. And if they meet in the middle at 20, he can still declare victory. I mean, I think this is a no-lose situation for him at the end of the day. So I do think credit card rates are predatory, and I hate it. But I think the problem is with education, not people actually having credit cards. And I also think we need reality. The reality is what we see on the internet is not reality. And we live in a materialistic society, and we need to get away from that. People are more concerned about what other people have and what other people are doing rather than themselves. I'm a big believer that most people who are posting on social media, that are taking pictures of food, are not truly happy in life. I truly believe that. I could be 100% wrong. But I think that we need to really look at things and say, you know what? Maybe this isn't realistic. And maybe I should weigh the facts of taking out 150K in debt to go to freaking college. When I heard how much Hofstra University is from one of my buddies who had to write a check for his son, I could not freaking believe it. Hofstra University, when I graduated, was a safe school. It was a school you just applied to because you knew you were getting in because you were from Long Island. After room and board, and I don't know why, I mean, that's a whole different story, but after room and board, if I remember correctly, I think he said the check was 78 grand for the year, something like that. Maybe it was 68, but I really think it was 78. It was crazy. It is insane. So I just, what I wish he did was make it where student debt is expungible in bankruptcy court, because it's crazy that it's not. I think that you would see the cost of college tuition come down. And I think that we should really be looking at maybe a bachelor's degree only needs to be 2.5 years instead of 4 years. And we shouldn't make somebody that's going for accounting take freaking art, history, and music. It's a waste of time. It's a waste of resources. And it just adds costs for an education that's not needed. You don't need that. The whole freaking well-rounded shit is bullshit. Sorry, it is. I mean, I don't know. I feel that I'm allowed to say that. I mean, I have an undergrad in economics. I have an MBA. I feel that I can say that half the shit that I did in college didn't need to do. And not everybody needs college. I know too many people that make a lot of money not going to college. I know a lot of people that work in the trades that opened up their own electric company, have their own contracting company. They do phenomenal. I think we need to normalize just common sense. Just saying. Anyway, so got off on a little bit of a rant there. With SoFi, I'm a little worried, guys. We need to see what happens this week. I'm a little worried only because SoFi is going to be fine in the long run. My fear is that it gets caught up in a negative narrative this week and next week. And my fear is more short term than long term, but maybe I'm overthinking this. Maybe this blows over and nothing happens on Monday. But there's got to be a scenario with at least a 10% chance that financials get taken to the woodshed this week. And we're going to get the big companies reporting. You got JP Morgan on the 12th, I think. Let's bring that up. We got JP Morgan reporting earnings on the 13th. That is when is that? So that's Tuesday. So we better believe that Jamie Dimon's going to be addressing this. When's Bank of America reporting? Bank of America is reporting on the 14th, so they're reporting Wednesday. Citigroup is reporting on the 14th, so that is Wednesday also. Jane Fraser. They're all going to be talking about this. So let's see what happens. I don't know what they're going to say. I don't know if this is a nothing burger. I hope it's a nothing burger. And everybody just moves on. At the same time, SoFi may be in the best position because they can actually pivot. They don't have brick and mortar stores. They don't have the underlying costs of the big banks. And maybe they're able to undercut some of the big banks in what they are doing. So we'll see. I don't know how to handicap this. We were discussing it last night, and I'm starting to feel like there may be easier plays. And when I think about it, I may just throw a stop loss on my shares at 23. I'm up a bunch. I have no idea what's going to happen. I really don't know. And Mantis, it's a great point. It's only a tweet. It's not a bill. I'm with you. And we may be overreacting. I think this just caught us all off guard. And I'll speak for myself. Just when things were going great for SoFi, okay? Just when things were going great, this happens. Now, maybe it's a nothing burger. We got through this is certainly not as bad as what happened during the pandemic. This isn't SoFi getting one hand tied behind their back and losing the largest revenue generator, getting cut in half. So they got out of that. They'll get out of this. I don't know. This is probably going to be short-lived. Nothing may happen. I'm probably just going to set a stop loss just in case, protect some of the gains. But that's about it. And Lena, I agree with you. He's probably just worried about midterms and trying to get people rallying around. I get that. I completely get that. But if you game it out and if this picks up steam and 10% happens, that's going to be tough for a lot of financials. So it's just Lisa put it the best way. It's just very frustrating from an investor standpoint. It is just very frustrating. So we'll see. I mean, I was very excited about SoFi. I'm still excited about them. I need more clarity on this. You guys think a 23 stop will get hit? It may get hit. I mean, what's going to be really interesting is what happens tomorrow night. I'll be watching a Mid's future show. I can tell you that much to see where everything is. You're right. You guys are right. It's hard to handicap all the variables. There's a ton of variables out there. I think the S&P will be fine, Lena. Financials are 12.5%, tech's 33%. So I think the S&P is fine. Yeah, maybe sell some. There's a lot of things we can do. I got to think about it. So, we could see that also. That's a good point, Lisa. If this happens, we could see fees associated with checking and savings account. That's a really good point because at the end of the day, what are you going to do? Not have a checking or savings? That could be how they offset this. So we'll see. Now, for those of you that are not aware, we're going to move into something that I'm going to talk about tonight. So I'm going to do a bunch of due diligence. I'm going to go over my plan. So Matt and I are doing a small account challenge. We're each taking 10 grand and we are going to take 1 year. We're going to see what we can turn into. There's two goals. One, outpace the S&P 500. Two, outpace the other person. So I have an idea what I'm going to do. Matt and I will be live tomorrow as kind of a pregame to Monday. We're going to do a weekly episode to go over everything that we did that week. I may lose. Listen, I may lose. 100% I may lose. We'll see. I'm not a trader, but this is going to force me to be a little bit more active. I have an idea of what I want to do. Chills, Matt and I will be live tomorrow, not today. We're going to be live tomorrow at like 4:30 or 5, I think. Tonight I'll be on at 9:30 for the Saturday evening or Saturday night investing. I'm not sure if anybody's joining or not. I will see, but I'm going to be going over my plan with everybody and kind of refining it and crowdsourcing it. And you guys can help me out a little bit. Are we applying leverage? No. This is a straight 10 grand, no leverage allowed, no margin allowed. So now here is the thing. It can be in any type of account. We're not putting limitations on each other. The one thing that we are doing is 100% transparency. So every week we're going to do a show and we're going to outline if we did anything, if we didn't do anything. I'm going to make a spreadsheet with every single trade, everything. I'm pretty sure he's going to do the same thing. Anything goes, okay? Anything goes. So I am doing mine in an account that is established where if I want to do credit spreads, I can. If I want to do cash secured puts or cover calls, I can. If I want to buy options, I can. That is what I said to Matt, that I want to have that optionality. I will be putting this 10K in an account that already has everything turned on. Now, we are not using margin to my knowledge. I don't want to. I don't think he wants to. But I have no idea what he's going to do. I have an idea what I'm going to do. I'll tease it now, but I'm really going to go through it tonight. It is going to be a mix of equities. So Nick's hobbies, yes. For level 2 options, you have to have margin enabled. That does not mean that you have to touch your margin, okay? You just have to have it enabled in order to do level 2. So I'm going to be doing a combination of owning equities outright. I'm going to do cash secured puts, and I'm going to run a wheel strategy if shares get assigned. And I am looking to take all the premium that I generate from cash secured puts and covered calls and throw it in an income producing ETF and maybe stack a little cash on the side, and during earnings season, maybe buy a naked call or two. I don't know. We're going to see. I'm thinking about making this a complex account for only, or a complex portfolio for only 10 grand, but I'm trying to win. You know what I mean? Doing it for the content, doing it for all of you, trying to win. It's a 1-year thing, and that's what we're doing. And yes, the reason we're only using 10 is because I don't want anybody replicating what I'm doing, and I don't think Matt would want anybody replicating what he is doing. We're doing a number where if something happens and we blow it up, it's not going to impact us, not going to impact our lives. So it's going to be interesting. And I like the idea that we're going to have a weekly show going over everything. I'm going to try to do more of this. I was going to do a growth portfolio also. I'm holding off until after tax season. Once tax season is over, or let me say this, once March is over and I know what I owe and I get through all of that, I am planning on doing at least 1 or 2 public accounts outside of what Matt and I are doing. And I'm probably going to do a income account, and I'm probably going to do a growth account and go from there. I have not decided on how much I'm going to use or how I'm going to structure it. But the more I think about it, there's a lot of traction on my Seeking Alpha page with the dividend harvesting portfolio that I built from scratch. So I do think that I'm going to do something like that on YouTube for everybody. So we'll see. But I'm excited. I'm very excited about this. It's going to force me to be more active. And we'll see. Traditionally, I'm a long-term investor, but you know what? Maybe I'll trade a little bit. We'll see. I don't know yet. I got some ideas. I got some companies I'm looking at. And tonight's going to be interesting. I'm going to go through a lot of it and explain my thinking. That's probably going to be the big premise tonight about how I'm going to structure it. There's all different ways it can go, but I'm really trying to set in motion this weekend. And you know what? Maybe I'll build the tracker tonight live, and we'll go from there. Because I want to go into Monday morning with the plan. Amit is back sometime today. He's back sometime today. I don't know what time he's coming back, but he's back sometime today. Living on the wild side for a minute. I know, right? Shit. Living on the wild side. Go figure. Winner, what does the winner get? So we said that obviously dinner, but we're going to figure something out. I mean, if Matt wins, I'll probably surprise him with something. Maybe we'll do it where you have to buy the other person a gift and put a amount that you have to spend. So maybe we'll do that. Loser has to, well, that's not going to be part of it. I can tell you that much. That will not be part of it. I'm not going to go through what is going to be in there. That's going to be tonight. We're going to go through everything tonight. I'm going to definitely take suggestions from the group, talk with everybody, crowdsource this a little bit. Look, here's what I'm thinking. If this goes well, okay, if Matt and I if this ends up being a lot of fun and people like it, I may issue a challenge for next year, or maybe I'll do it over the summer where I invite the YouTube crew from Chris, Matt, Tevis, Tanner, Amit, and we all do the same thing. We do a weekly or a monthly show on it, and I'll put up something for an end of year prize for the winner at the highest ROI. And the prize will be something nice. If this works out, I would definitely be more than willing to do that and try to get some of the other people that we stream with on board. And I would definitely put up the prize and do it. So we'll see. But yes, I am open to that idea. Make it a Birkin. Damn, Charles. Charles, can you get me a Birkin? If anybody can get me a Birkin, let me know. I want to pay retail. I don't want to pay secondary. But if you can get me a Birkin, let me know. Listen, the White House quant could win. He is the White House quant. He could win. He definitely could. I wouldn't be surprised. No, not Birkin the dog. Birkin the purse from Hermes. Whoa, 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 whoa. All right, Chels, we need to have a conversation off stream. I think my wife is going to want to have a conversation with you. Oh, boy. Thank you for the super chat. I appreciate it. I mean, listen, you can do whatever you want. All I'm saying is don't do anything because we're doing it. I mean, Matt has already said that he's going to be taking chances on this that he wouldn't normally take. So I always says I don't want anybody replicating me. Now I can't stop what you do, but just remember, we're not doing this with anybody else in mind except for ourselves. So keep that in mind. He already said no. Yeah, I know. I know. But it's going to be interesting. I'm excited. I think it's going to be a good segment for content. I think everybody's going to get a kick out of it. And Steve and Matt are about to engage in some financial hanky-panky. That's hilarious. Oh, my God. Yeah, I mean, listen, this guy's got the freaking White House quant. He's got the White House behind him. So big show. The reason I said if you can get me a Birkin at retail, I want one, is because getting a Birkin at retail is paying, I mean, Charles would know more than me, but 60, 70 cents on the dollar. So I would buy one as an alternative asset and throw it in my storage unit. So that's why. It's my opinion, they're only going to appreciate in value. So there are several brands that are investments, okay? And there are several things. I'll just give you an example. Today, if you have history at a Rolex AD or a APAD, okay? If you're lucky enough to be able to get a Royal Oak at retail, well, I mean, I think they go for 38 to 44. I'm pretty sure you can sell them for 70 to 80 secondary. I'd have to relook at the prices. I can tell you that if you go get a GMT, you get the blue black with the Jubilee. After tax, you're probably paying 11.8. You can go sell for 16.5 out the door. So that's why I said if you can get me a Birkin at retail, I'm interested, because you're paying 60, 70 cents on the dollar. There's certain things with high-end luxury brands that you have to spend a lot of money to be able to have the right to purchase one of those items. And those items go for a tremendous amount in the secondary market. So, no, listen, my wife would buy a Birkin to keep it in the box, hold it for a year or two, and sell it. She wouldn't use it. But yes, I'm interested in that stuff. It's actually a fascinating industry. Blue black. Batman is the regular band and Batgirl is the Jubilee. But yeah, I mean, the Pepsi's still either the Pepsi, which is the red blue, or the Bruce Wayne, which is blue, which is black gray. I think those two are the most expensive right now in the secondary. I haven't looked in a while. So, but yeah, there's there's a lot of ways to flip and make money on that stuff. And for everybody here, I will be taking Amit to his first sports card convention next Saturday. So I'm going to try to convince him to do a 10-minute live stream from the convention. We'll see what happens. It's going to be, I think, 500 dealers there. It's going to be crazy. I can't wait. And hopefully Amit enjoys it. I think he's going to have a lot of fun. Probably not going to have as much fun as he had at CES, but I got a good crew of people coming. They were going with 6 or 7 people, so he's going to have fun. I'll probably take him and everybody else out afterwards. There's some steakhouses near it. I need to bring back Alternative Asset Weekly at some point and start talking about more stuff than just sports cards, because I think there's a lot of people that would be interested in that stuff. So for next week, Big Show, you want to know about closed-end funds? Nobody ever asked me about closed-end funds. Let me ask you this, Big Show. Did you read or watch the video that I put up on BST? Is that why you're asking? Bring back dividend. I will bring back Dividend Corner. I will. All right. Let's take this question. That's a good question. I like it. Let me give me a minute and I will break this down for you. So I recently put out an article on Seeking Alpha, and for the Milk Gang members, I put out a video explaining BST. It is the BlackRock Science and Technology Trust. Okay. I want to go to the link. That's not it. I think this is it. All right. So a closed-end fund is very similar. Why did they not update? Jesus. All right. So a closed-end fund, which is a CEF, is very similar to an ETF, exchange-traded fund. Difference is exchange-traded funds, ETFs, they expand their shares as more inflows come in. Closed-end funds have a set amount of shares. So that's the big difference. Now, they trade off net asset value. Right now, BST trades at a 5.44% discount. So right now, you're able to buy the closed-end fund lower than what the actual net asset value of the holdings is. The dividend yield, which is a distribution because it is a closed-end fund, not ETF, you're getting paid 7.3% annually from the distribution. So right now, right off the jump, you're getting it at a discount. You're buying it for under book value or net asset value, however you want to think about it. And you're getting paid a monthly distribution and annualized rate is 7.3%. So, yes, Liberty All Stars is another good one. I like that one too. USA, I own it in the dividend harvesting portfolio. So let me go back to the article where I have a few things laid out. So, you know what? Let's do this. Let me show you the holdings. So, obviously, science and technology. I'm sure everybody can already figure out that this is going to be very heavy tech. Holdings, biggest holdings, NVIDIA, 15%. You got Microsoft at 8%, Broadcom 7%, Apple, Meta, Oracle. You do have private equity in here. Databricks and Anduril, private companies, like that a lot. And you got Snowflake and SoftBank. So this is not something that I look at to beat the market. This is just an interesting fund that I have for income production that I really like. It has paid a monthly distribution of 25 cents for a very long time. And when I look at the distribution history, which I'm bringing up right now, pays $3 a share. We just got a huge distribution, special distribution of $1.20 in December because of the long-term, short-term capital gains, in addition to the regular monthly 25 cents. So the distribution has grown and then it's been maintained. And it has a very long history, very long track record of being at 25 cents per month since the end of 2021. And it's only gone up. It's never gone down, ever. The fund has been in production since end of 2014, so more than a decade. And when I look at the actual numbers from this, I'm going to read it verbatim from this. I just want to get the correct stuff. So BST is currently paying a $3 per share distribution and has generated $28.56 of distribution income since inception. BST increased the monthly distribution by 150% from 10 cents to 25 cents and then maintained it from 25 cents onward. Since inception, BST has allowed investors to generate 142% in distribution yield, in addition to another 102% capital appreciation. So this got hit really hard. The way that they do a large amount of income is because they write covered calls against the positions. Okay. Chels, I will bring back dividend corner streams. I'll absolutely do it. I will do it. Maybe I'll do it once a week. So it does a similar strategy as some of the ETFs with writing covered calls against the positions. It helps juice the income. It got clobbered in 2021, and I've been buying it the whole time. And it's been working its way back. Let me bring up a chart of it. Give me a moment. Look, I like it because I think that tech's going to do good. And I think in a lower rate environment that science companies will do good. Biotechs will do good. But look, over the past 5 years, it's down 20%. It got killed because the market turned in 2021 and because of the dividend income strategy with the covered calls, it wasn't able to really rebound. It's slowly grinding its way higher. But I was adding to this when this had a 10% plus yield. And I've just been plowing all of the income back into BST. I like it. It's got 100. It's got 1.5 billion in assets under management. It's managed by BlackRock. I like the holdings, and I've been in the fund for a while. I don't remember how long I've been in it for. I could tell you. When did I start writing about it? So I got into it in 2022 when I first started writing about it. So I got into it after it crashed, and it's done well for me. I just happen to like it. So, Lena, what are your big dividend stocks? Did I see Ford? No. What did Ford do? Oh, damn. Good thing I added that to the dividend harvesting portfolio on Seeking Alpha. One thing I should do a video just on that. And Chels, I'm with you. I don't like the fact that I'm pigeonholed my 401. It sucks. Can't wait for Ethereum to bump and call. Yeah. I mean, I don't know what's going to happen with Ethereum. I'm probably going to buy more. Ooh, did Ford pay a special dividend again? Hold on. No, they didn't. Ford did not pay a special dividend. But yeah, Ford is killing it. I like it. Good income company. Now, I don't know what Ethereum's going to do. I'm probably going to buy more again. It's a long-term play for me. Rusty, thank you very much. Yeah, I've looked at LYB a few times. I've never pulled the trigger. I'll look into it again, but I've never pulled the trigger on that. Yeah, 11%. I mean, let's look at it real quick. Why didn't I like it? Is a good question. Why didn't I like it? It's more the margins at this point, and because their profitability was declining. So here's why I didn't like LYB. So the margins are hard. They do almost 38 billion in revenue, and they have less than a 10% gross margin. On a net income basis, they went from 5.6 billion in 21, sequentially down, and they're losing money. I just don't. The numbers are going the wrong way for me. EBITDA has gone from 8.6 to 2.5 billion. The numbers are just going the wrong way. It's just something I'm not interested in. Yeah, Dow Chemical is another one. Is Target over 100? Good. I bought that at like 92 for the portfolio. And when I say the portfolio, I own one share of Target for my dividend harvesting portfolio on Seeking Alpha, which I really should do a dedicated one for the YouTube community. Actually, you know what? I want to do a poll. If you guys could do me a favor and actually answer this question, I'd appreciate it. All right. It's a yes, no question. Please pick one. So I've been writing a dividend harvesting series for just over 5 years on Seeking Alpha, where I put, did the poll not go up? Oh, why can't I see the poll? That's odd. Huh. That's a new one. I can't see the results of the poll for some reason. The hell's going on here? Oh, there we go. Okay. So I have been doing a dividend harvesting portfolio where I put $100 a week into an account. I document everything I buy. I document every dividend that is generated, and it looks like this. So I would definitely be willing to replicate this and do it specifically for YouTube. So I have a whole portfolio tracker that I did, and I'll explain what all this stuff is on the individual stuff. So this is the actual value of the account over the past 5 years. The blue line is invested capital, red line is account balance, yellow line is dividend income. The idea behind this was to create a portfolio that mitigated risk, generated reoccurring income. A lot of reasons why there was a big contingent on Seeking Alpha that said you can't invest in income producing assets without a lot of money. And I said, well, you can build an account from scratch. You just need to let time do the work, especially if you're on a budget. So I show the forward annual dividend income per sector. I have everything broken out. I got everything really on point. The weekly dividend income that's produced from the portfolio every week, last year and current year. The monthly dividend income each month is very interesting, seeing how much money was produced on a monthly basis year over year. It exploded in December, which was really interesting. So I'm tracking everything. How many positions are generating more than one share per year from their dividends? That's the column on the right. It shows how much new future income is being generated from those additional shares that are being generated. And then I show what I hold in each sector, how much of the portfolio in the sector it is. Oil and gas, I have Enbridge, BP, Kinder Morgan, Exxon, OKE, and I wonder why Chevron's not showing up. I own Chevron. Maybe I need to redo this one. The top 20 positions in the account. Altria Group, Realty Income, Verizon, Enbridge, Starwood, QQQI, BST, Citigroup, British American Tobacco, JEPQ, Ares Capital, the PIMCO Dynamic Income Fund, JEPI, Pfizer, Omega Healthcare, SPYI, AT&T, Simon Property Group, Bristol Myers, and BP. And then my favorite is dedicated analysis on the top 10 positions. And this shows, like, if you look at Mo, so Altria Group, I've put $801.72 into it. I bought 18 shares. My price per share is $44.54. It has generated $227 in dividend income, 28.32% of the initial investment has been generating dividends. I've gotten 4.5 new shares, 22 and a half new total shares, what the position is, what the forward yield is off the current dividend, how much forward income it generates. So this is updated on a weekly basis. And then how much forward dividend income I'm generating annually, what the monthly average is, weekly average, daily, and hourly. So a lot of people like this. Some people don't. Looks like 78% said yes on 154 votes. So I guess I'm starting a brand new portfolio and a brand new account on this. We'll see. I'll probably do the same thing. I'll probably start with $100. Neo, thank you very much. Really appreciate. If you received 1 million earmarked for your dividend portfolio, I mean, look, I can't answer it the way you want me to answer it. This is how I'm going to answer it. Okay. Oh, Big Show, thank you very much. You're welcome for the CEF chat. So, Neo, this is what I'm going to say. If I was going to build something for myself, I would make it extremely diversified the way that I did my dividend harvesting series, because I'm a very big proponent of you don't know when a company is going to slash its dividend. You don't know when shit's going to hit the fan. And I would want protection against myself. And I would probably replicate a lot of what I did with this. My accountant loves me only because I've been friends with him for 3 decades. He hates doing my taxes because I give him a stack of freaking accounts. You know, everything's organized, but he says that I have too many accounts. And he gets annoyed that I have so many freaking accounts that I give him. I don't know. Whatever. Progressive? That's something I've never owned. (6.5% yield). You know what? I feel like I looked at them back when they were like 120 and I never bought them. Holy shit, they really climbed. Damn. That's a great chart. No, I put 100 in a week and I spend it every week and I document what I do. I do not wait for opportunities. Yeah. Oh, Lena, he charges me. I definitely get the friend discount. He definitely does not charge me what he should charge me. I will tell you that right now. That's a nice special dividend. Wow. I need my friend discount. Listen, friend discounts are important. Yeah, beard's back. I was going to shave. I didn't. Probably come off tomorrow. So yeah, we'll see. I'll probably do the same thing. I'll start another account. Maybe I'll do 100 a week in that account and we'll go from there and we'll just freaking do it, you know? See what happens. I'm staying away from Netflix, everyone. Staying away. No, this will be the first. Oh, I got to give him the Robin Hood one too. Shit. Yeah, he may not be. He's gonna be a cranky person this year. Cranky. It's all good. It is all good. Let's tell him I'll go to Borgata again with him. Look, Netflix could do really well. This whole Paramount stuff bothers me, so I'm kind of staying away. I am thinking about buying more Nvidia though, so we'll see. I really like Nvidia here, everyone. I really do. I don't think I have enough, even though it's a sizable amount of my portfolio. And and I'm sorry. Look, everyone, I can't answer everything. I don't see everything. Don't think I am ignoring people. I'm truly. It's hard to keep up with how fast the chat goes. I like SCHD. All right. I have it. I've had it for a long time. I don't mind it. You don't buy SCHD to outpace the S&P. So, I don't know. Right. If NVIDIA goes to 250, it gives you 30% this year. I like it. I own Apple, so I don't need to consider it. I own it. I don't know that I'd buy it here. Beyond Meat? No, stop it. I'm the wrong person to freaking talk about Beyond Meat. I'm a freaking carnivore. I want real meat. Okay, give me real meat. Open kind of guy. Okay. I don't know if Vera Rubin is a threat to Vertiv. I think that we need so much more of everything. It'll be fine. I mean, shit. Tesla is something that I think it's overvalued, but I wouldn't bet against Elon. So don't listen to me on Tesla. I think I've showed everybody my breakdown for Optimus. If he pulls Optimus off, and if Optimus is as big as what I think it's going to be, Tesla could be a 10 or 20 trillion dollar company. That's a big if, and I am no longer in Tesla. Okay, so I don't know. I love the concept. I think they'll do okay. It's just hard for me to invest in them now. Look from the Mag 7. The ones that I would add to this year for myself would be Meta, not in this order. Meta, Amazon, Nvidia, Microsoft. Those are the four that I like. I agree that Nvidia's revenue could stall. I don't think it's stalling anytime soon. That's my own opinion. I don't think it's going to stall anytime soon. I've always said I'm going to try to get out of Nvidia before that actually happens. We'll see what happens. Zeta is something that I'm looking at very heavily. I love Alphabet, but I think it's run so much that it's I think it'll do well. I think it matched the market. I think it can outpace the market. I don't think it's going to do as well as Amazon or Meta this year. I saw that the All In guys talked about it. I think Chamath talked about it. I haven't listened to it yet. I will try to listen to All In before tonight's show. Okay. I'm going to sit on the couch. I'm going to read the news. I'm going to watch All In. If they reverse merge, that'd be pretty crazy. I own Google and I'm not doing anything with it. I actually like CrowdStrike. Yeah, Alphabet's really interesting, guys, but it's run so much that the time to buy it was when everybody thought that search was getting cannibalized. Rusty, you're in Omega Healthcare? Love that. Oh man, that's okay, Frames. That is one of the hardest questions anybody can ask because you're talking about the best companies in the market. I can make an argument for any one of them. Okay. And I'm going to do it right now. Argument for Apple, 2 billion install base, 100 billion free cash flow. Everybody loves their products. Services is now 100 billion reoccurring revenue business. It's hard to bet against Apple. Microsoft, incredible platform, enterprise juggernaut. Nobody's getting rid of Azure. SharePoint, M365 licenses. Everybody uses LinkedIn. It's a beast. Alphabet, same thing. You got YouTube in there, search, same thing. Nobody's getting rid of it. Amazon is going to be the first $1 trillion company. If they can get margins up to 18%, that's 180 billion operating income, and that should put them at a $6 or $7 trillion company. Meta, I don't think anybody's getting rid of Instagram or Facebook. They just print money, and the best part about Meta, all of us create their content for them. So it's tough. I mean, I'm leaving Nvidia and Tesla out on purpose. At this point, if we're going to say indefinitely, which is very hard, Microsoft would be the one. If we're going to say the next 5 to 10 years, I really like Meta. I like all of them. I like Amazon. I don't know. It's a very hard question. It's too hard for me to answer. Cincinnati, thank you very much. Super excited that you started a drone podcast. What drone podcast? Cincinnati, explain to me what you mean by this, because I don't understand what a drone podcast is. Oh God. If you get monthly vested RSUs of Google, I mean, you're doing well. You're doing well. I don't know. I would probably just stack those. I don't know. I'm not in that position, so I got no freaking clue. I think XRP is going to surprise people. Everybody thinks I'm freaking crazy, but I still think that XRP is going to surprise people. I love MPLX. I think it's run too much, but if you're looking for income, it's a great company. Listen, if sock sales increase revenue for Apple, I will freaking go nuts. I love Palantir. I just think it's overvalued. I'm a shareholder. I love it. I think it's overvalued. I don't know what to say. I call it like it is. I'm not going to fanboy Palantir if I don't think that there's value to them be unlocked. Now, that doesn't mean that I think it has to go down a lot. I love the company. I'll always be a shareholder because I love what its mission, and I love what it does for the military. I'm pro-military, but you know, at some point, you gotta say it doesn't really make sense on evaluation. I mean, I don't know. I love the company though. I have no idea if BMNR is going to be at 70 this year. I don't know what it's going to do tomorrow. I hope it's higher than where it is today. Is Roy predicting 6X? I will talk to him about that. We started looking at OSS last night. It was a little interesting. I will start doing a little bit more DD on it. It's not necessarily a company for me. I have some people I can ask about it. Look, QXO is interesting. I think it's backstopped by Apollo at 2350 at this point. So it's definitely interesting. I think it, look, if they can make some big acquisitions, I think it's going to shoot. We'll see. Yeah, OSS is a very small market cap, Charles. T-Rex is interesting, yes. I love ARCC for dividends. I bought some more the other day. I have no opinion about eVTOLs. Yeah, look, BMNR needs Ethereum to go up, so that's all we need. I have no idea when that's going to happen. I like Zeta. I'm going to do a full analysis on Zeta at some point. My favorite cover call income ETF, that's easy. It's QQQI and SPYI. Those are my favorite. Nope, not diving into Rivian. No interest in them. Sorry, no interest in Rivian. All right, I got a real question for everyone. What's everybody doing for dinner? Because I need to eat dinner. I need to figure out what I want. I didn't have lunch. We're going to skip lunch. We're going to go right to dinner. Got to power the engine. Got to power the engine. Got to do some research, maybe write another article, and then coming back at 9:30. Greek. I'm seeing Greek. I'm seeing steak. Ooh, chicken franchise could be good. Had chicken parm yesterday, but I could get down on that. Listen, cereal is good any time of the day. Oh, okay. In case everybody is wondering, Amit's alive. He just liked something I sent him. So he's around, everyone. He probably just touched down. You're right. You can't go wrong with pizza. Nope. No fish and chips for this guy. All right, everyone. You guys are giving me some ideas. You guys are giving me some ideas. I mean, what's my favorite pizza or what's my favorite pizzeria? Standard Slice is my favorite. And I get down on Neapolitan, I get down on New York, I get down on Sicilian, doesn't matter. No, I do not use Uber Eats. I don't do any of that stuff. It's freaking raining outside. I don't know if I want to go out to go get pizza. I might melt. June, they're doing a deep dive in 2 hours. So they're going live at 7. Interesting. I wonder if they put that in our group message. Hold on. Interesting. I'll probably tune into it. All right, everyone. This is what we're going to do. Roy and Tevis are going live in 2 hours, it looks like. Tanner also. Look at these guys. Oh, is Tevis doing the stock tank thing tonight? Who just tweeted that they have a life update? What are you talking about? Can you let me know who tweeted they have a life update? Oh, Amit. Let's see this. Hold on. Yeah, no, yes, this is great for him. I'm so happy for him that he did this. So, yeah, this is going to be great. This is going to be great. I am so proud of this guy. Really happy for Amit with this. So, it's going to be interesting to follow what he does with this. Yeah, I think he's talked about that live. It's probably the first time he put it on X, but I think he talked about this live a couple of times. He joined Anderson Horowitz Venture Scout Program. They're letting him manage a little bit of money to write checks into startups. So Anderson Horowitz was early in Facebook, Twitter, Airbnb, Lyft, Slack, Coinbase, and a bunch of others. So it's going to be good. It's going to be good. All right. I'm going to go get dinner. I am going to get some work done. And I will be live at 9:30. Some of the crew may join me. I don't know. I will be here at 9:30. I'm going to give everybody an inside look at how I am evaluating things for the stock challenge with Matt. 10 grand challenge starts Monday. I will be going through everything. I hope to see everybody tonight. I hope to discuss my ideas, do some polls, see what everybody thinks. Thank you, everybody, for being here. June, Shells, Lena, everybody, Rambler, Big Show, everybody, thank you. I truly appreciate it. Hopefully, you can join me tonight and help me out. And I'll talk to everybody tonight. Thank you, all the mods. I really appreciate everyone and everything you do. Go enjoy some dinner, drink some coffee, and I'll see everybody at 9:30. Have a great afternoon, everyone.